Good morning, I should say, to everybody. And hi, Brock. Welcome. And for people who are, in the afternoon, wherever you're listening in from, welcome, welcome, welcome. Thank you, guys. Today, I want to talk about candlesticks. And if you heard what Silas said earlier, it's a new twist to candlesticks that people are not really necessarily talking about. Candlestick is nothing new. A lot of people have actually traded candlesticks, but I think one of the things that has happened is that as time went on, people got nonchalant about it. They did not see certain things that they were supposed to know about candlesticks, and so they just kind of like brushed it aside. And so, one of the things I'm going to be showing you guys today is how candlesticks could have really helped you along the way. Hey, Jackie, West Coast, wow, welcome, welcome, welcome. So I'm going to go ahead and get started first with my disclaimer. I know Silas mentioned that, but again, I need to just make sure that I reemphasize, trading is risky. There is risk involved, so I don't want anybody believing that it's roses and petals. Things are always going to work out fine. Yes, there's a lot of money to be made, but at the same time, if you're not careful, you can definitely take some huge losses. I have done so myself. I've lost a lot of money in the past, but that has, been things in the past. It's one of the things that we just have to let you guys know. So everything I share today is not a trade recommendation. I am not a financial advisor. I'm not a stockbroker. I'm not a former Wall Street nothing. I'm just sharing with you some things that has helped me transform my trading from losing so much money to really making a lot of money. And that's kind of like what we're going to be talking about today. Okay. Okay, so when I talk about candlestick signals, again, most people already know what candlestick signals are, but I'm going to show you some tips that can help you improve your candlestick success. Okay, usually when I meet people and I say, "Hey, candlesticks," oh yeah, I already know about candlesticks. I already know about candlesticks. Show me something different. And I say, "Well, okay, let me show you a chart. What candlestick signal is this?" And at that point in time, they pause for a second and say, "Well, isn't that a bullish engulfing?" I say, "No, it's not." "Oh, no, it's not." "Well, let me look at it again." And they'll look again and say, "Oh, wait, wait, wait. Okay, yeah, yeah. It's that tweezer thing, right?" And I was like, "No, it's not." And then all of a sudden, it's like, wow, what they thought they knew about candlesticks, all of a sudden now they realize that, wait a second, it's not. Or I might find people say, "Oh yeah, this is what a bullish engulfing signal is," and I say, "No, it's not based on this criteria here, the definition of a bullish engulfing." And they say, "Well, but I thought it was this," and I say, "No, it's not." So just be open, have an open mind, and as I share with you some tips that will really help you with this. And then I'm going to show you a live example. Basically, well, I shouldn't necessarily say live, but we'll go to the charts and I'll show you how we navigated through the choppy market that we had recently. Most people know the month of August was a very choppy market. There was a lot of people that lost a lot of money in the month of August, but I'll show you how, if you understood some of these tips that I'm going to be sharing with you, if you understood that and applied it to candlesticks, it would have guided you through the choppy market that we had in August. Okay, and even leading up until today. Yesterday, the market had almost made an all-time high. Almost made an all-time high. I mean, we were like literally cents away from making an all-time high today. I have been telling people since August, this market is ready to go to all-time highs again. Now, how was I able to see that? It was simply because some of the tips that I'm going to be showing you today allowed me to be able to see that. So, wow, this market is ready to go back to all-time highs. Okay. Truth be told, I thought it was actually going to happen by September. It just took a little longer. But here we are at the brink of all-time highs again. And we know that there's a lot of people that talked about recession, recession, recession. I tell them right now, I said, hey, hopefully you didn't miss out on this rally. But if you did miss out on this rally, no worries. Hopefully after today, you'll be able to start, applying some of the stuff that is going to help you. Okay. And then lastly, I'm going to share with you some tips to guide you through this earnings season. Right now, we have earnings seasons. I'm going to show you some tips that's going to help you through that process as well. Okay, so let's go ahead and get started. Some simple, helpful tips that can help you improve your candlestick analysis. Now, the one candlestick signal that almost nobody, I don't hear anybody talking about right now, is this candlestick signal called the bullish Arami. Now, it's nothing brand new, like I said, but nobody's really talking about it. And if you were to pay attention to the bullish Arami, there are some things about the bullish Arami that would have guided you through this market like literally since, honestly, since August. It would have really helped you through the market. And so one of the first things that I'm going to share with you is the biggest mistake that I see people have when it comes to the bullish Harami is not realizing some of those things that I'm going to share with you here. And one of them is that a bullish Harami, okay, uh, a bullish Harami has to be a green and red color. I mean, as simple as that sound, please keep that in mind. All right. I've seen a lot of people see a red and red color and say, well, you know, it's within the red, the previous red candle. No, you know, so they'll look at something like this. So they'll look at this green candle right here and say, oh, well, or if this was a red candle, they'll say, okay, well, it's within the candle to the left. So that means that it's a Harami. No, it's not a Harami. A Harami signal has to be two different colors. One has to be green, one has to be red. Now, the next thing is keeping, you know, in mind, just because we're saying green and red, it has to be positioned correctly. And so in this case, we want to make sure that we have a red candle on the right and a green candle on the left. Okay, that's important. Now, some people will confuse this with what they call an inside day, but that's not necessarily the case. And this is where, again, if you notice what we have here, an inside day would have, you know, wicks at the top, wicks at the bottom, and they all contain wicks inside of it. Not necessarily the case with a Harami. So we have to be very careful that we don't confuse an inside day with a Harami signal. We have to be very careful that we don't look at two of the same colors as a Harami signal, okay? One of the things that you have to be aware of when it comes to a bullish Harami is you ignore all wicks, okay? For a bullish Harami signal, this is where people get confused, all right? With the difference between a Harami and the inside day candle. And believe me or not, that little difference can literally throw off the analysis that you're doing with the chart. Okay, so when we look at a bullish Harami, we do not consider the wicks. The wicks have no relevance whatsoever when we are looking at the bullish Harami signal. So please keep that in mind. I get this one a lot. This is probably one of the biggest ones. People are like, oh, what about the wicks? What about the wicks? When it comes to a bullish Harami signal, you ignore all wicks. Make sense? All right. Now here's where it gets a little bit tricky. Tip number 4. In order for this to truly be a bullish Harami signal, the top of the green candle needs to be below the top of the red candle. The green has to be on the right, always has to be on the right, because we're talking about bullish, okay? The green has to be on the right. So the top of the green needs to be below the top of the red, okay? And the next thing is the bottom of that same green candle, which is this green candle right here, the bottom of this green candle. Again, we ignore all wicks. So when I say bottom, I'm not including wicks. Make sense? So if we had a stock that had a wick up here, say maybe a wick, like, we're not looking at this wick. We're not looking at it. We're looking at the bottom. So when you hear me say the bottom, I'm talking about the body. Thank you very much for bringing that out. Actually, we're talking about the body of the candle, okay? We want to make sure that the bottom of the green candle is above the bottom of the red. So the bottom of the green has to be above. And if we go back to number 4, the top of the green needs to be what? Below the top of the red. Make sense? So far, so good. Now, the next thing is when we see a bullish Harami signal, there's only one thing I want you to do on the day, anytime, honestly, anytime you see a bullish Harami signal, there's only one thing I want you to do when you spot a bullish Harami signal, and that is I want you to draw a horizontal line at the top of that green candle. And I'll explain the reason why later when we go to the live charts. I'll explain it and you'll see it for yourself. But the idea is that when we see all this, there's only one thing you want to do on the day that you see a bullish Harami signal, and it's to draw a horizontal line at the top of that green candle. Again, ignore all wicks. Next thing we want to do is wait for confirmation, okay? And we want to wait for the next candle and only buy if price is above the horizontal line. Make sense? Do we use this on daily chart? We can use this on daily chart, weekly chart, monthly chart, 5-minute charts. any time frame. The other question I get is, do we use this on a Forex chart? Yes, we can. You can use it on Forex. You can use it on futures. You can use it on cryptocurrencies. You can use it on anything that has a candlestick chart, okay? Because this is candlestick analysis, and that's it. For those of you guys who even see a candlestick chart of options, you can apply it to that too as well. Makes sense? The only thing I have not tested this on is a tick chart. So I know there are some people out there that use tick charts. I don't do tick charts at all. Now, my main thing is to focus on the daily chart. That's where I like to hang out. The daily and the weekly chart is where I like to hang out. But nevertheless, it works on all those. And again, just keep these tips in mind, and it will guide you tremendously. And then last but not least is, if we want price to close above that horizontal line, make sure that when it closes above that horizontal line, or when price is above that horizontal line, that we are dealing with a green candle and never a red candle. So never, ever, ever, ever buy on a red candle. Does that make sense? Never, ever, ever buy on a red candle. Now, I know what people might say out there, catching the falling knife, catch the dips and all that stuff. But I'm saying, learn to practice patience, wait to see data before you trade, okay? And one of the things that we have that has truly helped us is we stay away from red candles, right? Now, I came up with these tips right here because I was thinking about my son. My son is 7 years old. Actually, next week, Wednesday, he'll be 8. And my goal is that by the time he turns 10, he'll start learning how to trade, okay? And I thought about, if I was to put this together and I wasn't around to teach my son, and I say, hey, son, follow these rules right here. 10-year-old should be able to follow this. Say, number 1, green and red. Yes. Number 2, red, green on the right, red on the left. Yes. Number 3, ignore all wicks. Good. Number 4, top of the green, below the top of the red. 5, bottom of the green, above bottom of the red. 6, draw a horizontal line. 7, wait for the next candle. 8, never buy on a red candle. I said, if a 10-year-old can follow this to the T, he will be successful in trading. Okay. Does this apply to the bearish? Not necessarily. There's some slight differences, but we're not going to talk about the bearish today, but there's some slight differences. Okay. For the most part, it does, but there's some slight differences. All right. So let's take what we just learned right now and let's go to the market. And what I'm going to do is I'm going to take you to August of 2019, when we had a very, very choppy market. Okay. Very, very choppy market. And then we'll go through that. All right. Oops. Let's see here. I'm going to go to the chart. So here is, I believe this is August 1st. So August 1st, 2019. Now, let me do this. What I'm going to do is let me write out the same tips that we had. Let me just write this out so that way everybody can follow. You can have your, call it a cheat sheet, and we'll do that. Must have 2 colors. Okay, so that's the first step. One is green. We'll go ahead and type this in, and red. Okay, that's what we're gonna have first. Second tip, we said green on the right, and then we want to have left on left, red on the left. Sorry, red on the left. Okay, that's the second thing. What is the third thing? Anybody remember the third one? We said ignore all wicks. Okay, the fourth one, what we want to do is make sure that the top of green is below top of red. That's it. The fifth one, thank you very much. We want to say the bottom of green is above bottom of red. Okay, that was number 5. What was our number 6? We can go back to the chart and take a look. Even I kind of, forget sometimes. Number 6, draw horizontal line. 7, wait for next candle. 8, we are going to do this. So number 6, draw horizontal line at top of green candle. Okay. Number 7, we said wait for next candle to close above horizontal line. And then last but not least, which is a very, very big one. And I'm going to put this in caps, never buy a red candle. All right, so here are our rules. Everybody hopefully can see that. Okay, so we are literally going to go through the month of August, and actually we'll go from August till today. Okay, from August till today, we're going to go through all that. Okay, so on this day right here, when I say this day, we are talking about the very last day, because right side trading is all about trying to anticipate what's going to happen on the right hand side. We want to make sure that we can do plan and trade accordingly. So on this day, you can feel free, type in a buy or not buy, sit on the sidelines. What do we do on this day? On this day, well, rule number 8, the tip number 8 right here tells us never buy on the red candle. So I don't care what's going on in the news. I don't care what anybody's saying out there. I see a red candle, and for us, it is a automatic. We are going to wait. Thank you, Chris. We are going to wait. All right, so now let's move on to the next day. Boom, we have a red candle again. So this is where a lot of people would then come in now and say, hey, let's buy now. And why would they be buying? Because they see a hammer signal, right? Anybody sees a hammer signal today? They see a hammer signal. There's, okay, yeah, it's time to buy. The other thing that a lot of people would say is like, wow, price is doing what? Price is bouncing off of this support level right here. Can you guys see that? Oh my gosh, it's time to buy. It is off the support, so let's buy it now. And I'm going to tell you, no, do not buy it, because what? Tip number 8 says never buy on a red candle. Look, guys, if this is really going to bounce, it's okay, let it bounce. Well, but we want it to be a green candle. And so on this day, as much as it seems so tempting to buy on this day, I'm telling my 10-year-old son, based on these rules, to say, do not buy. By him following that example or listening to what I said, it saved them from this. Okay. And so this is why I don't believe in the fact that just because prices dropped, we should start buying because it's cheaper. No, we want to see certain data show up on the chart before we start buying. Most people that would have bought on that day will be regretting it today or the next day, because price has now gone even further down. So this is why we follow these rules. Okay. All right, so now price has gone down. Should we start buying? And I'm saying, no, we don't buy on this day. But on the very next day, wait a second, now let's slow it down. We have to slow it down, because for the first time since this drop, we now see something here. We see 2 opposing colors, okay? Now we can analyze this. Is the green on the right, red on the left? Yes. So ignore all the wicks for now. Is the top of the green below the top of the red? Yes. Is the bottom of the green above the bottom of the red? Yes. So what is the one thing we're supposed to do on this day? Is today the day to buy now? What is the one thing we have to do? Now, guys, this is what happened in 2019, August. I mean, this past August, okay? So what is the one thing we do on this day? Now, mind you, tweets are coming out, news is coming out, people are saying that there's a recession going on. All this stuff is happening, and we have to do one thing and one thing only, and that is number 6. You guys see number 6? What does number 6 say? It says draw a line at the top of the green candle. That's the only thing we do that day. We have to follow the rules. So we go here and we draw a line at the top of this green. Okay, I'm going to take this off for a second. And now number 7 says wait for the next candle to close above the line. That's it. So we wait till the next day. Oh, but I'm gonna miss out. Anybody ever had that fear of missing out? Because I know I used to have that fear of missing out, and that's why I came up with some of these rules. Oh, wait a second, what if I buy it now? And then there's gonna be the other group of people who are like, I don't know, this is just a short-term bounce. There's profit taken before it goes down even further again. But I'm saying, look, just draw your line. Thank you, Jackie. We draw a horizontal line. That's how we do. We go by the, by the rules. The next day. Next day comes. How many people are buying today? This is live. Market was super volatile that day, okay? Because market started down, went further down, okay? With all these wicks that we see in here, market went further down, and by the end of the day, did it close above that line or not? I mean, the market had this is where you see the news people say, things like, oh, the market had intraday up and down of 800 points, or the market had intraday of up and down 500 points, whatever it might be. And as volatile as that was, I'm saying, well, at the end of the day, price is above this line. If we go by our rules, the answer is yes. So Chris, you are absolutely correct. Brent, thank you, Brent. Is that the same Brent that is part of my group? I'm not sure if that's the same Brent. John, you know, this is excellent. So it is now time to start buying. And no matter what anybody else is saying out there, no matter what we feel, the fact is, I'm telling my 7-year-old son, when he turns 10, I said, look, buy this. And my hope is that he's not paying attention, because I'm thinking a 10-year-old is not going to be paying attention to the news. So let's see what happened the next day. Boom. How many people are happy now? Okay. Market. The rally that we see here, to me, this is not uncommon. I am not shocked to see this happen, where most people are saying, wow, the market took off. I wonder if this is going to take off and this is going to be the new rally. We're saying, look, I'm glad the market gave me information. It's almost as if the powers to be in the market has a way of kind of letting you know, hey, heads up. We're ready to start pouring money into the market. I'm not even going to say the institutions, because the fact of the matter is, I don't know if it's institutions, I don't know if it's the big dogs, but what I do know is, like, whoever it is, the powers to be, whoever these investors are that are putting money into the market, they're ready to pour more money into the market, is what this is communicating to me. So at this point in time, some people are like, wow, you know, that's a big jump. I don't know if I want to jump in. And I'm saying, go all in. But the very next day, we see the exact opposite. Okay, thank you, Keandre. I appreciate that. But the very next day, okay, so Andrew asked the question: do we buy on the open? Remember, this was the day that we buy, right? This is the day that we buy. And so we have something that we call the closing session. The closing session. Does anybody know what the closing session is? Well, you probably don't know unless you're a student of mine. We have something that we coined the closing session. We always buy at the closing session. Okay, forgive my handwriting, but this is when we buy. When we see that the rules apply, okay, and we know that we've gone through number 1 through 8, and everything is a yes, or at least we agree with everything that it says from number 1 to 8. In the closing session is the last 30 minutes of the day on a daily chart, okay? The last 30 minutes of the day on a daily chart. It is where we trade the most. So at the closing session, if we see a closing session and we know that price is staying above that, boom, you can buy it. Yes, William, it is being recorded. You'll get the recording. But we just started, man. We just started. Now, the closing session, last 30 minutes of the day, that's when we want to start buying. Okay, Andre? That's when we'll start buying. Now, what if you miss that day? Well, there's ways that we go about that, but I'm not going to go into that today. The idea is that if you catch this, because this day right here would have told you to pay attention, okay? On the day that the Harami signal showed up, that's just what a Harami signal is. It's an alert. If you had got that alert that day, you would have known to be prepared to wait for the market the very next day, and you'll be able to catch that. If you miss that, there'll be other opportunity, other trades that you can go catch and do the same thing too, okay? But now we go forward. We have the exact bearish version, okay? Now, I'm not going to go into the bearish candlestick, but we have the exact bearish version. So on this day, I saw this, and I was like, oh my goodness. Something is wrong with the market, because one thing that we do know is that when a bullish Harami signal shows up and the market starts rallying, what we do not expect is another bearish signal. Please write that down. If you have a bullish reversal signal and within 2 to 5 days you see a bearish reversal signal, you know something is wrong with that trend, with that bullish trend, that new trend. Something is wrong. Okay, something is wrong. And so at that point in time, we knew something was wrong. We didn't know what it was going to be. The tweet had not come out. Nothing came out. It was just a quiet day, and we had no idea what was going to come out. But because we knew that, wait a second, we just saw a bearish signal right after we just saw a bullish signal. One of the things that we do is that if we see a bearish signal, you put your stop automatically at the low of that day. okay? You put your stop at the low of that day, okay? Does this work for day trading? Yes, it does. Same thing, okay? I just prefer daily chart, but you can apply this, like I said, to 5 minute, 1 minute, doesn't really matter, okay? Very next day, we placed it on the low of that candle. Boom, we got stopped out, okay? Next day, market looked like it was ready to go higher again, only to have this happen to us. Are you glad that you got stopped out? Did you make money? Even though the market was choppy, if you bought down here, you got stopped out over here. Did you make money? Okay. Now, market is going back down. So we're looking at this as like, oh my gosh, this is not looking good. Market is, maybe volatility is coming out. By the way, the tweet came out during this time. This is when the tweet came out about, China and all that trade war stuff. Can't remember exactly what the tweet was. This brought the market back down, right? The next day, look at what happened. How many people see a bullish Rami signal now? Okay. How many people see a bullish Rami signal? Excellent. Now, I see this, and I remember teaching this, and some people like, well, but that's a doji. Yeah, that's a doji. Just like we saw a hammer signal, and there's so many different signals out there, but the one that people like, doji is probably one of the ones that most people talk about, and that's fine. But the fact is, wait a second, you missed something very, very important, and that is the Harami signal. Now, the one thing Harami signal tells us is like, get ready for a rally to the upside. It is so strong when it tells you, when it shows up that, we pay very, very close attention to this. So we go through all our rules again. We see that everything is fine. Now I'm going to take off this rule right here, and I'm just going to do the same thing all over again and put it right there. Now, volatile market. Recession, all this stuff is going on. Now I say, wait a second, market is now telling me to pay attention to tomorrow. So what do we do now? Okay, so Andrew, what we do now is we wait what? Because now we've got the alert. So we want to wait to when? The closing session of the next day. We wait to the closing session of the next day, and this is what we got, ladies and gentlemen. How many people want to buy? We don't buy the open here, we buy at the closing session, which would mean that at the end of the day up here, we are ready to do something. So I'm telling all my subscribers, I say, it's time to get back into the market again. But Wally, are you sure? This market is crazy. I said, look, I don't, at the end of the day, the chart it's telling us is ready to go back up again. That's the one thing I know. It's telling us that it's ready to go back. But what if it goes down? Well, it's already told us to get in. Next day comes, this happens. Oh my gosh, Wally, I should have jumped in. I should have jumped in. What about this resistance up here, Wally? What about this resistance? I said, look, we'll deal with that later. But the fact of the matter is the market told us to get in. And then the next day this happens. And then the next day this happens. Like, and then all of a sudden, we see another bearish signal, which is slightly different from what I'm going to teach you guys today. But suffice to say, this was another bearish signal. What is the one thing I said we do on the bearish signal? We come over here. We put a line at the bottom of our bearish signal. Because again, we had a bullish signal. Within a few days after that, a bearish signal appears. Like, okay, something is wrong again. And so this is where people's like, oh, this is crazy, man. It's like, this doesn't work. Well, what's your expectation? Because if someone like a Warren Buffett came to you and say, hey, we're buying this stock, and then 2 days later said, you know what, we changed our mind. Would you be upset that Warren Buffett said he was buying it and now he's changing mind? Or would you be grateful that he at least told you, look, we getting out. I know we bought this 2-3 days ago, but we backing out of the deal. Would you not be happy that he actually gave you heads up on that? And that's how I see these candlesticks. It's like, look, yes, it told us to get in. We had just got in 2 days after we got in. Now it's telling us to get back out again. And so what do? We get out. But if you got in over here when you were supposed to get in, your stop is right there. As long as price doesn't gap down below that, you should be fine. Very next day, this is what happens. Volatile market that day. Oh my goodness, right? Market was super volatile. Price came back down. But again, we're able to protect ourselves. So at this point in time, some people are like, I give up. This is it. This is the one that's really going to drop the market, all that stuff. And lo and behold, guess what we have? Another one. And so some people actually started getting frustrated. And I was like, why are you getting frustrated with the market? We don't control the market. You cannot control the market. All we know is what it's telling us. Oh, I can't make up his mind. And so some people say, I'm not going to trade. I'm ignoring this altogether. And I was like, well, if it tells us that we can get in, I'm going to get in. Now, one of the things we also do is if we don't see a red candle. Well, I'm sorry, let's go to the next day. So the next day, yeah, it's like a schizophrenic, all right? The market gapped up, seemed like everything was going to happen. And then by the end of the day, towards the closing session, guess where price was? Right back below this line. Can you see how this now saved you from jumping in? This is why we don't buy at the open. We always buy towards the close of the traders. How many times have you seen a stock gap up in the morning only to turn red, or gap down in the morning only to turn green by the end of the day? Okay, so for us, it's, well, we know what the market is really trying to do when we wait to the end of the day. Anybody that trades in the morning, what I consider that morning session to be now, I call the morning session the Medusa effect. Okay, anybody knows who Medusa is? The Medusa effect. That's what I call the morning session, the Medusa effect. Now, can you make money in the morning? Yes, you can. I'm not saying that you cannot. But because of this whole craziness, it's like market gaps up in the morning only to turn red by the end of the day. That's the Medusa effect. Now, if you know anything about Medusa, if you stare at Medusa, what do you become? If anybody stares at Medusa, at least the mythical, I don't know if she's even a god or not or something, you turn into a stone. And that's exactly what you turn into. You turn into a stone. And so they tell you not to stare Medusa in the eyes, because if you do, you turn into a stone. But so many people are so tempted, as much as they know, do not stare Medusa in the eyes, something tempts them to go ahead and stare Medusa in the eye, and then they turn into stone. That's how I see that morning trade. I tell people, look, don't even look at the first 30-minute of the morning session. And people are like, oh, I gotta see. I know I'm not supposed to. I know I'm not supposed to. But then they stare and then they freeze. Oh my gosh, the market is gapped down so much. And then by the end of the day, we see that the market turned around. My name is Wally, by the way. Somebody's asking who's speaking. My name is Wally. Okay. So looking at this, we don't trade. One of the other things is, even if this closed above this this horizontal line, you're welcome, Donna. What we have here is a red candle. And remember, rule number 8 says what? Never ever buy on a red candle. So on this, we don't trade. The very next day, we get this. Did we close above that horizontal line now? Yes. Is it a green candle? Yes. Do we buy? And the answer is yes. It's one day late, but did it meet our rules? And very good question, because Chris asked, he said it's a 1 day late. Yes, we can. I'll be willing to do this up to 3 days late. Okay, so if we look at this up to 3 days late, I'm okay with that. After that, then it's questionable. Does that make sense? Up to 3 days late, I'm okay with that. After 3 days, it's like, okay, yeah, you know what? Maybe I'm not so sure if I want to trade you. Okay, now that's just my decision. So on this day, it's time to buy again. People said they were not going to buy. They got fed up of this market. And this is what ended up happening to the market. They missed out on this rally. This was the rally that happened in September. All the talking heads that were talking about recession in August now came back and like, oh my gosh, who's talking about recession? Recession what? And I was like, wow, guys, this is what we're seeing here. This is how you navigate it through this process. And so I'm going to fast forward, because what ended up happening was price started coming back down. We started having volatility. The whole talks of recession came back. And guess what we had over here? We had a what? Harami signal again. Ho ho. So I'm super excited. I was like, Harami signal has showed up. It's time to get back in, or not. The answer is not yet. But we're prepared for the next day. The next day comes. Now, this is all in September. Now, this is just last month, like literally last month, not even a month ago. Okay. We see this. Guess what? Next day, red candle. What do we do on red candle? We don't buy. Next day, another red candle. What do we do on the red candle? We don't buy. There's people like, oh, but I thought you said Harami signal means the market is ready to go up. Yeah, Harami signal is an alert to pay attention. But it's also the reason why we brought these other rules to the forefront. Let me move this over. We'll bring it over here. Now we can move forward here. Let's go here. Here's where we are now. I'm going to take this now, drag it here. We're following our rules. Don't buy. Rule number 8. Next day, we see another bearish Harami. Well, guess what? We start the process all over again. Oh, but this is time consuming. Well, this is safe trading. Okay. Next day, boom. And then this, and now we're looking at a market that went down. Can you see how if we follow these rules to the T, this would have saved us from this? There was no guessing when we were trading this. This was not no guessing. Oh, I wonder what's going to happen. This was no guessing. Okay. But John is saying your trading is what I call the sweet spot of the move. Thank you. Okay. This is not guessing. This is us focusing on data. Sakar, I won't be able to do that today, unfortunately. My presentation was about the bullish side. Okay. I'm sorry, not Sakar, Frank. Okay. There is a recording of this. And so now we have the market that started doing this and this. And then guess what we had? This was like literally this month of October. Okay. I saw this on October 9th and I was like, well, market is getting ready to go up again. Yes, you can do that, Alan. Thank you. Alan is saying rule number 9, up to 3 candles to buy. Okay. Up to 3 candles to buy. You can make that a rule. I like that. But the more important thing is you never, if you stay away, if you follow these rules, it will keep you safe even in a choppy market. So I'm seeing this now, and everybody's again saying, "Oh no, here we go, recession, recession, recession." So what do? We do the same thing again. Now I don't know what's going to happen the next day, and this is where I tell people, "Say, look, I know how to read charts, but I cannot predict the future." And people are like, "Well, aren't you predicting the future?" Not necessarily. What I'm saying is, hey, the market is saying, "Hey, Wally, get ready again. We're ready to go up again." How high would it go? I have no idea. How long would it last? I have no idea. But the one thing it's telling me is, say, hey, get ready again. Okay. Can you short the market? Yes, you can. Slightly different rules. And it applies to indexes, it applies to stocks, it applies to Forex, it applies to commodities, cryptocurrencies. We did the same thing when cryptos were at the top, ready to come crashing down. Now, how many people want to buy on this day? And this is where everybody's like, I don't know. I don't know, man. This is just too volatile of a market, you know. And then theory starts coming out. Oh, you see, my theory is, you know, this happens and everybody starts searching for the news out there. Now, mind you, we went through all this and we didn't pay any attention to any news that came out. Believe it or not, when this happened, the very next day was when the tweet came out saying that, hey, you know, China is going to do something with America. They're going to agree to the terms and all that kind of stuff. So I always say, is it possible that somebody knew that the deal was going to actually come to fruition, and that's why they started buying? And then some people will look at this and say, oh, the market is manipulated, and that's why they look at the market and say, oh, it's manipulated. Stock market is manipulated. That's why I don't invest in the stock market. And I say, look, guys, let's get over the manipulation. Everything is manipulated. Okay. At the end of the day, it's training yourself to have a particular set of skills to see what these guys are doing. We hear people say all the time, follow the footprints, follow the footprint, follow the footprints. But this is how I see that happen. And regardless of news, tweets, what's going on out there, it's like we follow these rules and it has literally transformed our whole trading. John is saying excellent presentation. Never looked at it this way. Thank you. A lot of people, and this is why I say when I tell people candlesticks, say, oh yeah, I know candlesticks, but no, it's the way that we apply this. So I'm seeing this now and I say, hey guys, market's ready to rally again for the month of October. Get ready, guys, get ready. Thank you, Chris. Chris is saying, yeah, never seen this type of presentation before. And I'm saying, get ready, guys, market is ready to go higher again. And then again, we're looking at this, it's like, look, one of the things that we know is that when these things show up and they start giving us these positive, you know, confirmation, again, even though we don't know how high it's going to go, one of the things we can expect, it's just an expectation, is that we might make it to all-time highs. And so at this point, I was telling people we might make it to all-time highs again. And so this is where we are today. Literally where we are today. Okay. Yesterday we were like within cents of making all-time high. I just walked you guys through August, September, October, and the one candlestick signal that keeps on occurring over and over. And this is why I said the one that nobody's talking about. Okay. Nobody's talking about it. Thank you, SP. SP say, Mr. O, thanks so much for the simple rules to trading and reading the market signals. It's very simple, guys. Again, keep in mind, I created this for my 10-year-old son. Okay, that's literally what I created this for. I said, how can I help my 10-year-old son? Because I said, my 10-year-old son is not going to listen to the news. He's not going to follow all the politics. He's not going to know any of this stuff going on. Okay, but at the end of the day, if I can show him this, even if I'm not there, and I say, son, follow these rules, I know he will do well. And that's what we have been doing here. Make sense? There are rules on managing the trade. There are rules on trailing stop. There are rules on exiting the games and all this. And I keep them all simple, but today I won't be able to go into all of those. Okay, let me do this because I am running out of time. I only have 15 minutes left. Let's do this. Here's a testimony of somebody said, look, I purchased a few of your videos from your website and the information has done what? Totally, not a little bit, totally changed my trading life and mindset. Great videos. Thank you very much. Here's what one person says. Look, I'm a Magenta student of yours. Looking forward to purchasing your Candlestick ebooks. I just finished watching up your webinar on Monday. And I have to say, of all the classes and all the webinars I've ever attended over the many, many years of trading, I have never understood or grasped the concept of when I should exit a trade onto when, onto now. Listening to your lessons have changed the way I trade. This is what I'm hoping you guys are going to be able to get out of this. This is what we're trying to do. Okay, it's not up for interpretation. It's a system that takes you away from the emotions. Okay, it's a system that lets, hey, if I follow the rules, it will keep me out of the bad trades and keep me in the good trades. Okay, and that's what this is. Now, one more thing, tips on earnings season, because we are in earnings season. Let me just run through this real quick. 3 tips real quick. Only trade stocks with good pre-earnings move. Okay, you will see stocks. I know a lot of people try to focus on earnings day itself. We have a slightly different way on how we focus on that. There are stocks that have pre-earnings move. If you learn to identify those type of stocks that have a pre-earnings move, trade the pre-earnings move. You know what I'm saying? What I mean by that is, look, if this is earnings day right here, there are some stocks that would rally up onto that earnings day. Why not focus on this? Because this earnings day itself is so up and down. It's so, 50-50. Why not focus on the ones that actually tend to rally before that earnings? And then it says, number 2, look for stocks that trend well after their earnings report. So just as you have some that does it pre-earnings, then there are other stocks that would do really, really well after earnings. If you focus on those, yes, you'll be in the trade a little longer. It's not a one-day trade like an earnings pop would be, and everybody get excited about Tesla earnings pop and all that stuff, right? But there are trades that will rally before that earnings, and there are trades that will rally after earnings. That is what we focus on. Okay, and make sure that they've done this for the last 3 to 5 years. If you can follow these rules right here and put together a list of stocks that do that, you will see that earnings season would not be a time to be scared. Earnings season will actually be a time to be excited. Okay, we have a software that we use to help us with that. It's called Magenta Trader. Okay, he will see right here, these dots right here, this is earnings. Notice how Disney is one stock that rallies before earnings. What does it do after earnings? It drops. I was telling people back in August, stay away from Disney, stay away from Disney after earnings. Why? Because it drops. People would say, oh, well, because of the streaming and all this stuff is going to do really well. But, I said, look, after earnings, this is what happens to Disney. So whether you want to short Disney or you just want to stay away from Disney, after earnings, stay away from Disney. That was what it did the year before that. In 2017, this is what it did. 2016, look, every single time. This was earnings, comes right back down in August. Okay, this is earnings, come right back down. So when you see certain stocks that have this type of pattern, and the software allows us to find them very easily, then all you have to do is just focus on those stocks when earnings season comes. So here's Disney going down again. All right, now here's the software, and one of the things it tells us is, look, it goes down after earnings, and then look at the October earnings. This is October earnings right here. What does it do before the earnings in October? It goes up in price. Now, what does it do after earnings in October? It actually goes up some more. Okay, it goes up in price before, and it goes up some more after that. Now, we know that earnings is coming out on Disney pretty soon. Well, let me show you what just happened on the chart of Disney, DIS. Here's me, and let's see what is Disney showing us today. This is, well, not today, but yesterday. Does anybody recognize this on Disney? Is it coincidental that this is shown up? Type in the answer. What is this right here that you see right here? This is earnings day now. We have earnings coming up. Is it coincidental that a few weeks before earnings, thank you, Brock, a few weeks before earnings, John, Gary, excellent. We now have what I just showed you is the one candlestick that most people are not talking about. This is literally happening on Friday. Can you see the excitement that I have? Knowing that Disney has a track record of going up right before earnings. The WO setup, right? The Wally O setup. Knowing that, and look, this green box right here tells us that this is like one of the best times at Disney rallies. So you can see how we are prepared ahead of time trying to trade this. Everybody's going to worry about Disney on earnings day, but I'm telling you right now, the mere fact that we've seen an alert, like the powers to be, whoever those guys are beginning to tell us, wait a second, it's time to start buying Disney. But we'll find out on Monday for sure. If you follow the rules that I gave you, we'll find out on Monday. Can you trade options with this? Absolutely. But there's a way to go about doing all that. The biggest thing, my goal here today is I want to do one or two things. One is help you see that, look, it is possible for you to be able to read what a chart is communicating. It's a skill, just like a language. You learn the language. Warren Buffett says the language of business is accounting. I'm here to say the language of stock market is the charts, candlesticks. But unfortunately, people have done it so wrong. It's been so saturated that most people can't figure out which ones to even pay attention to anymore. They couldn't figure out how to apply them correctly, and it's threw them off. And I'm saying when you apply the correct candlesticks in certain situations, okay, in certain situations, you will benefit from this type of stuff. So here is what Disney does before earnings in October or November when he has his October or November earnings. Here's what it does after. Here's what it did in 2015. Before, after. Can you guys see this? Trying to capture. See, and pay attention. See, this is the earnings day itself. How much did the stock really gap up? It did gap up on earnings, but how much did it gap up? Consider trading this as opposed to this. Consider trading this as opposed to this gap up. This is what everybody's so focused on, but they miss out on this. They trip over the dollars. They trip over the dollars so they can pick up the pennies over here. Now, that's just a figure of speech. I understand that you can make a lot of money on earnings, though, don't get me wrong. But they trip over the dollars that they can make to pick up pennies. And that's one of the things that we try to help people change. This is 2016, so that you don't think that this is me making it up. You can go back to the chart and see this. Okay, people to ask me all the time, what's your track record? It's like, you go and see yourself. It's not about what I'm doing, it's about what the chart is showing you here. This is 2016. Look, this is 2017. Same exact thing. And this is where I lead and I tell people, I say, look, most people say, oh, the stock market is random. It's not random. Random means that there's a lack of pattern. Okay, random, if you go look up the definition of random, random means that there's a lack of pattern. Okay, so if the stock market was random, then there will be no pattern. How many people would agree that this is a pattern that is occurring in Disney? It might not occur in Microsoft, it might not occur in Tesla, but in Disney, it does. And so this is why I say you can go out there and find what happens to these type of stocks. I used to be deathly afraid of earnings season. Now is like my most exciting times. 4 times a year, I get super excited about earnings season. Okay, so this is what it did in 2018. Last year it was a little choppy, but we still had that rally. And then look, your infamous Harami signal. See, this was the Harami signal that kicked it off right here. We got our confirmation right here. Market went higher into earnings. After earnings, here's what we got again, took off. Okay, so this is what I'm showing you. Our software helps you be able to do this. This is the email I just sent out recently, and I encourage you guys, take a screenshot of this if you want to. I said, look, markets looks bullish. We're expecting markets to rally after yesterday's doji. This was on October 15th. Market has made almost all-time high since then. Earnings season is now officially in full effect. We do not expect to trade the earnings day gap. We are interested in the rally before and after earnings. Okay, this is literally the email I sent out to my subscribers just like two weeks ago. Financial stocks are up for this week. The setup looks very likely positive. Earnings results should be expected. That day, what's this called? Johnson & Johnson came out with earnings. I told them to fast forward to a certain segment of the video on how they're going to trade that. Earnings came out on, if earnings comes out, this is how you trade it. This is how you're not going to trade it. And I say, here are the following stocks that we should be paying attention to. Go take a look at these stocks, ladies and gentlemen. This is Morgan Stanley, JP Morgan, Travelers, Comcast, AutoZone. These are all stocks that I gave them on the 15th and say, look, these stocks are getting ready to rally before or after their earnings. And they've all done really, really well. Okay. So how can you get started with us and be able to get more training on how to do this very, very simply, take away emotions? Well, I'm going to be having a live workshop this coming Tuesday, 6 p.m. If you go here to the bottom of this right here, you see this rightsideTrading.com/trade. If you can't attend it live, it will be recorded. This is going to be recorded. So even if you cannot attend it live, sign up and join us on Tuesday. This is where I go into more details, okay? I go into more details. You're gonna learn things like how to find the bullish and the bearish setups, the whens and the hows, the questions that most of you guys were asking today that I wasn't unfortunately able to answer. We will do that on that day. That is my promise to you, okay? We'll talk about the biggest mistake that causes people to misunderstand candlesticks. The fastest and easiest way to tell when something is wrong with a candlestick signal. So if it gives you a candlestick signal, most of you guys will say, hey, where do you place your stop? Do you do a trailing stop? Do you do all this stuff? Look, we will discuss all that and more. Make it very, very simple, because you got to keep in mind, my goal is that my 10-year-old son will be able to see something like this and be able to put this into practice. And he will not even have me there to ask any questions if I wasn't there. And that's what I'm going to go over with you guys. Okay, it's going to be recorded. You guys will have a copy of all the recordings so that way you can go back and watch it over and over and over as much as you want to. Okay, you will also get the personal rules that I created to ensure that I can identify the fake signals from the real signals, because I'm going to tell you, not all bullish Rami signals are created the same. So I'll show you how to find the fake ones from the real ones, even before you apply any of these rules that we're talking about. Conditions when to use those signals and when not to use the signals. Okay, we'll talk about learn to tell which signals work well with certain stocks. That's another misconception that some people have, is think that, hey, I can apply to everything, just like people think I can apply Fibonacci to everything, and then they see that it works on some and it doesn't work on others. Have you ever thought that? Like, why did it work on this stock but it didn't work on that stock? Okay, well, I'm gonna show you how you can see whether it works well with a certain stock or it doesn't. And then now you don't have to guess, because again, we're trying to take away guessing. How we trade with and without stop losses, and how to scan and find these stocks, okay? Plus, I'm gonna give you a 30 days trial of my Magenta software so that you guys can use it throughout the earnings season. Does that make sense? I'm gonna give you guys access to that. In there, it talks about a lot of different things, but I'll explain more when we get on the call with you guys. But just know that software that allowed us to find Disney and many other stocks, the Johnson & Johnson and the Morgan Stanleys and the JP Morgans, all these stocks, you'll have access to it. I will give you access to that software for the next 30 days so that at least you can try it through the earnings season. And hopefully you like it and you sign up and you continue staying with us. But after the earnings season, if you decide you don't want it anymore, you don't even have to do anything. There's not even a subscription just yet. But if you like it, then you have to contact us and say, hey, add me to your subscription list, and then you start doing that. So what are you going to get? The live workshop, $997. I'm also throwing a bonus VIX video to see and tell when volatility, is going to affect your trades. How to tell when volatility is over, guys. This is humongously huge. I'm going to throw that bonus in there for you guys. You get the 30-day access to the software, and you will get my email alerts that I'll be sending out once a week. Once a week, I'm going to be sending out, here are my stock picks. I pick anywhere from 5 to 7 stocks that I see. If I don't like them, then I'll just say, hey, I don't like these ones. But the ones that I like, I say, here are the ones that I see that I like. You'll get that every week. Okay? And then today and today only, if you decide to sign up today and today only, I'll give you another additional 30 days. So you get 60 days of the software if you sign up today. If you were to sign up today with all these prices, $2,239. But you can get started for $297. Okay, that's a special for today, $297. Now I'm also going to do one more thing, and that is, if you sign up before Sunday, I'll knock off another $100. Okay, if you sign up before Sunday, I'll knock off another $100. You sign it, you can get it for $197. So everything we just talked about, okay, all this stuff, the live workshop, the bonus VIX video, the software for 30 days. Okay, now if you sign up today, you'll get 60 days, but if you sign up by Sunday, you only get 30 days. Okay, if you sign up today, you get the 60 days. If you sign up after today, you'll get the 30 days of the software. You'll pay $299, $297 after Sunday. The workshop is on Tuesday, so you have up to Tuesday to sign up. After Tuesday's gone. Okay, but if you sign up today, you'll get 60 days, and you'll get it at the $197. Does that make sense? My time is up. After the 60 days, it's $97 a month for the software. Okay, $97 a month for the software after the 60 days. Does that make sense? I don't have time. Well, so the software is $97 for the basic version, and then we have the pro version, which is $299. Okay, so that's the difference. $97 for the basic version, $299 for the advanced version of the software. If you have any questions, email us. But guys, go ahead and sign up. $197 is like one of the best deals that you'll find out there. I'm going to go ahead and turn it over to Silas again. Silas, thank you so much. I'm not sure if you're on the call. If you can hear me, it's time to switch it back over to you. I look forward to seeing you guys on Tuesday. I'm going to show you guys how to be able to start interpreting the market going forward from now. Okay.